Um, Hi guys, sorry about this, about the no sound. Okay, I had a mistake here, and in the OBS streaming, I had X put in the mic. So sorry about this, guys. Oh, you guys missed all this stuff. Okay, I have to say it again, I guess. That's my mistake. I went ahead of myself. Didn't read the. Okay, only now it should have sound. Now, you guys, sound now should be good. Please say it's good now, because I fixed this problem. Okay, sorry guys. Sorry, I'm really sorry about this. I had the OBS output in mute. So I was saying the mic is recording, but actually the output from the OBS live streaming was turned off. That's kind of not very smart from me. Okay, guys. So I will say this again. If you guys are interested to understand this, I talk about this again. Please go ahead, say in the comment. If you want us to talk in the market, then just you can say it also. Okay, looks like you guys are gonna ask for it. Okay, guys, so now we had one question right here. Okay, please focus on this one because it's difficult. Pound New Zealand is given a sell here, guys. Anyway, so if we look at the USD CAD in the 4-hour time, in this one, so I put two, you know what, I can make those lines white, which is gonna make more sense. I don't like it, or just leave it as is. But what I can make, does not allow me to put anything on the top of it. Okay, guys, so the question now is why in the H4, in the moving average, you get up signal in the 4-hour time frame, then now in the H1 you have sell signal. If you got the SAR, yes, in the day you've had a buy previously, then later the 4-hour time frame never changed it to to a buy, or did recently go to a sell, one of the two scenarios. And the reason for this is the SAR. How does it work? How does it work is SAR right here is to go to the chart. Let's just read in the comments. So the SAR, how does it work, guys? It takes in value over time. Okay, so value over time. So let's say you did pay, let's say $50,000 in a beautiful nice car. Okay, guys. So you paid $50,000 in that car right here, and the price of the car did depreciate to come down to let's say 42,000. Okay, so if you trade moving average, you're gonna get this sell from 50 to 42, right? If you trade SAR, also you're gonna get the signal from 50 to 42. So if we put this one right here and we say this is moving average and that's SAR, just to compare between both of them. Sorry. Okay, then this between 50 to 42 is going to give you, in the moving average, is going to give you a sell. Okay, the same is going to happen in the SAR. It's going to give you a sell. Okay, guys. Okay, so this drop from 50 to 42. Okay, just gonna make it a little bit smaller. Okay, now let's say it did go from 42 to 46. So if we put 46 right here, okay, then this will be the rise from 42 to 46. What's gonna happen here? Actually, you're gonna get a buy signal here in the moving average, okay? But what's gonna happen in the SCR? You're gonna get continuation of the sell. So no new signal. That means still sell is still in effect. Okay, guys? So that's the trick right here. So while the drop from 50 to 42, it did give you a sell signal in both a moving average and SAR, both of them give a sell signal. That's correction wave from 42 to 46. The moving average is going to give you a buy, but the SAR is not going to give you anything because it uses value over time, and it does compare between that time and that value at 50K and right now at 46. However, it did drop to 42 first. It will consider this in this SAR drawing, but it will be having a low tolerance for a pullback before it can tell you the rate of depreciation of the value over certain time, okay, is not going well. So it does compare the rate of depreciation over time. So this is the value, and the SAR compares. So let's put it here. So SAR compares rate of depreciation, rate of value depreciation over time. Okay, guys. So SAR compares rate of value depreciation over time. So that's why here SR it will not give you a buy signal, because comparing to the 50, 46 is still good. That's how does it work. So you're gonna find a little bit of difference when you trade the moving average to trade the SR. So you need to understand. So if let's say the moving average is gonna give you a buy, you know this is a correction wave. SR will have tolerance for the correction wave and fluctuation in the market. So that's why when you get a lot of, it's a trending, but it's a lot of fluctuation, and you don't want to go within this fluctuation in the market or kind of ranging in the down channel, you can probably better to consider the SAR signal more than the moving average signal. I hope this does make sense, guys. Okay, so that's the difference between the SAR and the moving average in the big picture. Okay, so if you look here at the USD CAD specifically, so at the yellow, this yellow one, this one right here, you can see it continuously did have a sell signal. But this sell signal, which is the yellow one, you really, what does it mean? If you were here and you had a 500 points pullback, that was still okay by the SAR. So really, who's gonna be patient to have 500 bips pullback and it will be okay with it because he did catch a sell at a good price? You guys, does this make sense? So that's, but while the moving average is gonna give you a buy, the SR will give a sell. So looking back here, you can see this SR is a sell in the H4, but the moving average in the H4, it was a buy. I hope that's enough, you guys. You don't get bored. So sorry I didn't read through all the comments right here. Euro Australian, Landell saying here, Euro Australian going down as you said, sir. Thanks, Landell. Hope it works for all of us. Beautiful double top. Nice, Landell. You catch this from the weekly forecast. We expected this double top in the double bottom in the stock market and double top in the real Australian Euro New Zealand. That's wonderful, guys. That's wonderful. We were blessed with this. That was beautiful, guys. In the last weekly forecast, we said we expect a double bottom, and which is arranged a little bit in the stock, and that's gonna make EuroCAD, Euro Australian, Euro New Zealand to make a double top before it does fall down, and we got the double top in this, so which is really, really fantastic, fantastic. Okay, we fixed this sound problem. Sounds good now. Okay, guys. Okay, yes. Hi, Bob. Levi saying is good now. Amran, yes, good sound. Andrews also no worries. Mr. Abbas sounds good. Oli, please start over. Okay, we finished this one. Mr. Amran, no worries, no need again. Your Australian analysis, please. Okay, guys. So please, you guys, if you have any chart you want to talk about, please leave a comment or type a comment. So we're gonna talk about Euro Australian now. Sorry, Euro dollar. Okay, guys, I changed my location now. It gets better network connection. But it's beside the air condition, so the sound is gonna have a little bit of hiss and noising there. So if it's bad, I can move again. But if it's okay, then we can continue like this. See, the network is kind of slow a little bit. So we're talking here euro dollar, DOW. The sound is good, bro. Pound Australian, euro CAD, pound New Zealand. Okay, so let's take it one thing at a time. So first, guys, you have to check this one, see what's going on. So Australian is really strong, and New Zealand and Canadian, and that makes sense because the stock market is going up. A Japanese yen, dollar, and franc weak, so stock market's going down. Sorry, that's the stock market going up, so safe havens are going down. So, you guys here, that's the great thing also about our system. When you have the VSA system, and it will give you Japanese yen, so I'll put this here. When VSA shows so CHF and JPY mostly, and maybe the USD, not necessarily down. Okay, then the market is buying stock market, stock. Okay, and equity is going up. So when the VSA shows the franc and Japanese yen, and maybe the dollar, not necessarily, but mainly the franc and Japanese yen are going down, then equity is going up. Okay, then you guys know equity is going up. So that's really important to have the system, guys. Because if only franc or only Japanese yen, this may be a news regarding this currency. Okay, if Japanese yen only and the franc at the left side, the market doesn't make sense. You have to get both of them, Japanese yen and franc. And if you see Japanese yen is really weak, okay, and at the other side, okay, look at that. At the other side at the same time, you have to get that on the other side. you see Australian, New Zealand, Canadian, both of them going up, then you know equity is being bought. Okay, guys? So if you do have the VC system and it's giving you, if you guys want to download the system, is available on our website. It's $249 per 1 year, which is really, really competitive. And you have access to everything in our website. So which is really amazing. Like it's very, very competitive price to compare to anyone in the market. So really, really like very, very affordable price. Japanese yen and dollar and franc being weak by VSA system, it means there is no fear in the market. People are buying equity, especially when you see Australian, New Zealand, Canadian. Why are those three? Because Canadian is affected by the oil, New Zealand, Canadian affected by Chinese economy. So they are kind of high risk. They are not a safe haven currencies. They are beta currencies, they high risk. So when investors are ready to take more risk for more reward, they will buy the Australian, New Zealand, Canadian. Okay, and they will buy the Dow Jones, the SPX, the DAX, maybe also the what do you call it, the Bitcoin. You know, they're probably going to be buying this. Then they're going to be selling the franc and Japanese yen and maybe sometimes a dollar. Then the pound and the euro, they need to be at the middle. Maybe the euros here, the euro there, it doesn't matter, but they need to be right at the middle. Okay, guys. So that's the deal. So euro and pound in the middle, those three at the right side, and those three at the left side, like this. Okay. So if you do look at this one, you will know exactly what's going on in every currency pair right now. So Australian Japanese yen is a buy, Australian dollar is a buy. That's overall. But let's say this Australian Japanese yen did start yesterday buy signal and now is overbought. It's not smart to go and buy it now. So you still, after you look here, you have to go to the chart. Let's say Australian Japanese yen or Australian dollar. So Australian dollar here, if you go 15-minute time frame, see the signal that starts right here. If we put the ABC, and you take the 1 hour time frame, the signal did start right here. Look at this. So really, you're a little bit late to go buy Australian USD now. If you did buy, you should have bought right here or there, one of the two levels, like this, 68.19. So you've been in 100 pips profit now. You probably should take profit and just get out. See that 100 pips from this signal right here was very clear. You guys, when you look at the correction, you're gonna find it going like this in a channel, and every fall it will go to correction about 60 to 70% up, and that's what will tell you this is a correction. See, if you look at this, see how it did go down here. Okay, let's take this like a down wave like that. Then when it did go back up, it went like 60%, right? Then it did come down here, which made like it's a lower low, but really small, nothing, you know. Then it did take time. So this time taking time, then it did make a lower low, right? But then it did go back to do correction to about 50 to 60%. Once you did break to the up of this channel, it did give you a buy signal. Then look at the size of these candles. Look at that candle, so big. And look at this candle, so big. Then it did take some time. Look at that candle, so big. So that's kind of the correction waves when you get the pullback about 60 to 70% of the original fall. Okay, that's really bad market to trade. You cannot have a good sell out of this one. It's very bad. The correction range in market is the worst ever to trade. It's very bad. It will play with you psychologically and will just damage you. It's very bad to trade. It's very bad. It's very, very difficult to make money in this one. That's why a lot of people, if they don't understand the figure of the trend shape against the structure of the correction wave, they're gonna have a lot of hard time. Okay, guys. So this is just a quick overall of the market. Okay, so you guys want, okay, so this is too late now to enter, guys, in my opinion. It's too late. Wait, you should have entered a little bit early. That's the first sell was okay, and that's when the stock market was crashing in a correction wave last week. But this week was bad. See that? It was terrible. But after it did break here, and this was a really nice buy. So if we go quickly, the crude oil, guys, we said consider as a correction first, then you want to take a buy signal. That was really nice. If you go to the 15, see that was nice. It did rise fast. Yes, you can scalp this also if you want. See, if you do scalp this one, that's beautiful in the 5 minute time frame. So if you guys want to do scalping, I would really recommend something you're not gonna hear a lot of people to say to scalp with. It's oil. Oil is really good in scalping 5 minutes with the ABC system. It's amazing. Okay, as you can see, you can make good money in this. Buy and sell in 5 minute time frame. It's very good, very small stop loss size and big potential for each one of those. This one was like 70 points, and that one so far it did make 200 points. So that's really nice, guys. Okay, if you do scalp with the 5 minute in our ABC system, it's really good. If you want to trade bigger time frames, okay, but 5 minutes is okay. Why 5 minutes is okay with our ABC, but I would not recommend it for many things, because volatility. Oil is very volatile, just like the Dow. So when you do trade the 5 minute time frame, you're gonna get really good entries with high volatility over time, so which you can make good money, and you can benefit from the small and medium and big waves in the market. I hope this does make sense. So guys, this was one level. It did stay under this one. Okay. So we can say one wave down, then up. After we break this one up, then we're gonna go to this level. Okay, guys, to re-enter again, you probably today is over. You should not. You should get out. And I told you one hour ago, guys, this is it's gonna either come down or it's gonna go sideways. That's it. It did make the move. 1,000 points for today. SPX or Dow. That's more than enough. If someone wants to take like a sell here in the scalping, it's probably, I wouldn't recommend, but it's probably possible. You know. Okay, guys, sorry about this. The laptop shut down for battery, so I just reconnected now. So probably the live stream did go black and coming back is okay now. Sounds good now, guys? So first, let's check sounds good before I answer. Okay guys, please let me know if the sound is good. So it's really important to trade in the New York time. It's where the most of the money is. Okay, so here, this was not updating, that's why. So how often do you have to check to see if there's a good buy or a good sell? Okay guys, if you connect your computer to the internet and desktop and leave it open, you can actually connect your MT4 to your phone. So you guys, option. If you guys get this notification, then you get a metacode ID. You put this one here, okay, and you connect to like Android. You're gonna be able to get notifications to your MT4. I will make one video sometime on how to connect the system to the MT4. Okay. Anyway, so for the DOW guys, now the signal it did make. Once you get like 600 pips in the one day in the DOW, really you want to get out. Look at from here, from this level to this level. How much is this? We're gonna take this forecast off right now so you don't get too much lines. Okay guys, how much is this one? This is 1,300. That's huge volatility in the market. So really, that's it. And that's for the last 4 hours, right? So that's 1,300. You just need to get out of this after this big volatility. If you get the average for Dow is 560 points per day. So if you get 600, if you do get, see guys, this one. How far we expect the correction in this one, possibly to the same level where the signal did start right here. So at 25, 150, you should be watching out. If you get a reverse from this area here, and don't trade today, wait tomorrow New York session. So let's type it here. Now, so once made 600 points, get out, okay, or close half of your position and move a stop loss to entry. That's very important because the volatility now in the Dow, it's about 600. Sometimes it will go higher, I know. At least you know when it's 600 pips, you should take some profit because there is a potential that will reverse in you. One big wave like this, 1,300 points, it will not be able to push up without going sideways for 1 day or 2 days. It needs this move, okay? Especially when it's going up. When it's going down, it will go faster because in the sell-off, there is no need for big correction. You can see all the candles are below the cloud. See that all the candles are getting out of the cloud. But when it's going up, that's also something good to notice, guys. When it's going up, you're gonna see half of the candles inside the cloud. Why is this? Because the momentum of the buy, it's very hard to convince someone to invest, but it's very easy to tell him what you own is going to go down and he's going to go sell really fast. So that's very important, guys. If you own a car, I tell you this car is going to be value at nothing tomorrow, you're going to go sell it today. But if I tell you this car is going to be $100,000 tomorrow, you may believe me, you may not believe me, you may take the opportunity or not. So it's logically and emotionally to convince someone to go buy something and invest is very difficult. But if he did buy it and you warn him about the risk, he will go sell it very quick. So that's why the psychology in the sell-off, it moves like in one direction very fast. And that's why I don't like to sell equity unless it's a sell-off. So see, right here, that's a correction expected. However, I know it may come down 500 points. I'm not really interested in this buy. Okay, if we did take this buy, that was really nice, you get out, then you wait to make the correction, then here if once it starts to bounce back, I'm interested in this buy again here. So that's the buy I want to take. I want to wait till tomorrow, it comes down here, it does break to the upside, then I take this buy. Okay guys, I hope this makes sense. Watch out you guys, gold, it did make the move for today right here. So now what we can see is some choppiness right here. That's it. Once you get some good profit out of something, get out of it. Because the market will make some good moves, then after this is gonna be trending. So a euro dollar I don't think is gonna break this top right here. And that's because the dollar index is coming down, guys. See, the dollar index is coming down, so the euro dollar is going up. Excuse me, guys. So that's why the dollar, but I think my forecast is this is gonna come down, okay, as the dollar index is gonna get strong. Just in case if I'm wrong, if it does break up here, then we're gonna be probably going to 1.15. This is gonna continue being choppy because the dollar and franc and Japanese yen, three of them are weak. That's why you're gonna get a really bad market. Why this was a good rally? Because the stock market was going up, Japanese yen was really weak. Why this was coming down? Because the stock market was in a correction wave, so Japanese yen was very strong. That's why it does explain the up wave, it does explain the down wave. USD CAD. Okay, we talked about this chart right here. It looks pretty cool. Okay, guys. That's it. You're gonna see the correction right here. All the market now is going in a correction wave. That's it. You're gonna find also Euro Australian did a stop right here. So if you guys want to take profit in Euro Australian, Euro New Zealand, and you wait 30-40 pips up like this, small up wave like this, you know, then here at this area, then you can sell again. That will be probably smart, you know, like this. Okay, let's look at the comments right here. So who's asking here, how often does he have to check to have a good trade? I would recommend you only trade New York time. Don't trade other times. The best market always in New York, and you're gonna be waiting for certain trades. Okay, you have to have a plan. So last week we said double top in Euro Australia and Euro New Zealand, right? So let's say you were waiting for this to happen. Let's check this chart. See, we mentioned last week that was coming down in the weekly forecast. That's from the weekly forecast. We said we expect double top and coming down. let's say you were waiting for this to happen and you go trade something like the ABC system, and you get in you're waiting for the signal, right? You get in the half-hour time frame. Okay, you found the buy signal. We talked about double top, so you're really not interested in this one at New York time. Then you start seeing this is dropping after making a beautiful double top right here. Okay, so after this double top, then you see it dropping right here. So if you did catch the price at the same exact level, which is here, that's pretty cool, but that's a little bit risky because it could have broke to the upside. So, but if you did take the sell right here at this area, okay, which would be recommended, then it's going nice. Then once you're in profit, you move your stop loss and just leave it to hit target, right? Target, really, you want to go to the previous signal level right here, so 1622. So if you get from here to here 270 pips, is really cool. Even if you make one trade in the whole week, but has been planned well, you've been waiting for it, you get entry, good entry, perfect entry, you get perfect execution, you get perfect exit. That's it. You don't have to overtrade. You don't have to take too many trades. If you see this coming down, probably the Dow start to reverse and going back up, guys. Probably if in the small time frame. See here, did the reverse going back up. You guys also can scalp the Dow. Many people like to do scalping in the Dow, and it's good because spread is low. Okay, it's low spread because it has a high volume in it, and it makes really good moves in the 5-minute time frame, and you get good entry. So you don't want to sell it at all. You want to take only the buys. If you take this buy, you made like 300. If you did take this one from here, you've made 700, which is really good. Excuse me. So now that's it. You've got 700. After 300, you get out of the market. You don't touch it. However, I expect this to go in the daily time frame. I expect this to go up all the way. Okay, all the way up to 31,000. You can see this reversal candle. Look at this wick, big wick right down here in the daily time frame. You guys see this one? It's probably potential for up, continuation of up. Okay, potential. Okay, guys. So that's good for today. We have spent like 1 hour and a half so far. So that was a good look at the market. I think we covered most of the stuff right here. So again, what's happening in the market? Dollar index is still coming down. You can see Japanese yen is really weak. Dollar is strong. So dollar is weak, and franc. Australia and New Zealand are strong. EuroCAD is probably going back up a little bit. You can see right here. Okay. If you guys want to see the signals, they're right here where they start. What kind of signals? Beautiful. Also, you can check out in the trend analyzer system, so you can see if you want to trade in the moving average or SR, you can see the signals. Okay, guys, that was my pleasure joining me today. Okay, guys, thank you and have a wonderful day. Hopefully, we can see you guys tomorrow. Okay, thank you. Have a good evening. Goodbye.